FPT was considered one of the safest stocks in Vietnam. Then it lost nearly half its value. And the most dangerous part? Many investors still believed it was safe during the entire collapse. A national favorite. A stock many people believed, if it falls deeply, you just buy more. But the market does not move by belief alone. This is what fascinates me about markets. A stock does not need to be a bad business to collapse, and a good company is not automatically a safe investment. Many investors do not separate those two things. They look at the business, they look at growth, they look at the past. And then they believe, if the stock has dropped hard, it must be cheap now. But the market does not move only by the company's story. It also moves by money flow. And this is the part many investors ignore. What first caught my attention was not simply that FPT was falling. It was who was selling and how aggressively they were selling. With highly concentrated stocks like FPT, where large funds hold positions very deeply, heavy selling waves do not appear very often, especially weeks where net selling exceeded roughly 5%. That is not normal anymore. It suggests that the structure underneath is starting to change. In previous corrections, the market usually showed very clear absorption. The price would fall, but strong money would quickly return to support the trend. This time, the structure looked different. The support underneath started becoming thinner. The stock still had rebounds, but the structure underneath was no longer the same. And this is where it became interesting. From late 2025 into early 2026, FPT was still making new price highs. From the outside, everything still looked strong. But underneath, momentum had already started weakening. Even the weekly MACD began crossing downward, while the price was still making new highs. This is one of the most classic traps in stocks that once performed extremely well. The price still made the crowd feel safe, but the structure underneath had already weakened. That is the part many investors never saw. They saw a strong business. They saw a deep correction. But they didn't see that the support underneath had already changed. FPT gradually shifted from being supported mainly by institutional money to a structure where more and more buying was coming from retail investors. The stock still rallied, but the structure underneath was no longer the same. And that is the moment when a good stock starts becoming dangerous. This is what I call the hidden wave, the changes underneath the surface of price, the movements most investors do not see until it is too late. What fascinates me is this. The crowd usually sees bad news last, but money flow often leaves first. That is why I never look only at the company. I always ask another question. Who is buying? Who is selling? Is the incoming money strong money or weak money? Is the group that once supported the trend still there? Because in markets, not all money is the same. There is speculative money, retail money, small institutional money, large fund money, and there is money strong enough to support a long-term trend. A stock can still have buyers, but the real question is, are those buyers strong enough to hold the price? Do they have enough scale to absorb selling pressure? Do they have enough patience to protect the trend? If the answer is no, then even a very good company can continue falling deeply. And this is why I do not see FPT as only a Vietnamese case study. FPT is simply the first example. Because the safe stock trap exists in every market. People naturally want to believe that something which performed strongly in the past will remain safe in the future. But markets do not work that way. A good investment does not only require a good business, it also requires the right timing, the right valuation, the right money flow, and proper risk management. Without those things, you can still lose heavily on a very good company. And this is difficult for many investors to accept, because they think, "But I chose the right company." Yet markets do not reward you simply for choosing a good name. Markets reward you for understanding when money flow is still supporting the story and when it has already started leaving. With FPT, the lesson is not, never buy good companies. The lesson is this: do not use the word good to ignore signals that money flow is weakening. Do not use the phrase long-term investing to justify having no exit point. And do not assume that a stock which once felt safe will remain safe at every price level. Because in markets, the most dangerous thing is not a bad company. It is a good company after strong money has already started leaving. That is the hidden wave. The movements most investors recognize only after everything has already happened. If you want to understand how to read those hidden movements, follow the channel. In the next video, I will go deeper into how to recognize when a good stock starts losing strong money support.